Greetings everyone. Welcome to my channel Inside Accountancy by Shakun, Accounting Made Easy. First of all, thank you to all my lovely subscribers for always supporting me in all the videos that I post. You have also been commenting about the doubts that you all have, and I try my level best to clear them as soon as possible. For those who have come first time to my channel, well, I welcome to you all, and I request you to please like, share and subscribe to my channel so that it reaches those who are in need. Moving on, in this video, we'll be talking about Chapter 16, Bills of Exchange from T.S. Grewal. The table of contents discussed in this video are the meaning of bills of exchange, the accounting treatment of bills of exchange, as well as retention of the bills of exchange. The meaning of bills of exchange. A bill of exchange is an instrument in writing which contains an unconditional order. It is signed by the maker directing a certain person to pay a certain sum of money to or to the order of a certain person or to the bearer of the instrument. This is the definition given as per Section 5 of the Negotiable Instruments Act 1881. So this bills of exchange I have explained in detail in my previous video. For more details, please click on the I button. Now let's talk about the uses of bills of exchange. When we talk about the bills of exchange, there are four uses to which the bill of exchange can be put. The first is retention of the bill. Retention of the bill means that the drawer is the person who has made the bill of exchange and is finally having the bill with him after the acceptance of the drawee. So retention of the bill means that the drawer, he retains the bill with him till the date of maturity. So till the date of maturity, he holds the bill with himself and receives the payment after the date of maturity. That is known as retention of the bill. Next is discounting the bill with the bank. So there might be a possibility that the drawer is in need of immediate funds and he cannot wait for the due date, and he needs the fund right on the day the sale was made. So he has an option of discounting the bill with the bank, where the bank will give the money to the drawer after charging certain discounting charges, and the money will be received by the drawer. So it serves as a source of finance for the drawer, as he can discount the bill with the bank and receive the money in return. Now on the due date, on the date of maturity, the drawee is going to make the payment to the bank. The next use of bill of exchange is endorsement of the bill. Endorsement of the bill means passing on the bills of exchange to a third party. For example, if the drawer also has a creditor to whom he has to pay the same amount of the bill which he has to receive from the drawee. I mean that the drawer has to receive a certain amount of money from the drawee, and he also has to pay a certain amount of money to his creditor. Let's say the amount of money is same. So what he can do is, the drawer has an option of endorsing the bill to the creditor. So on the date of the maturity, the drawee is going to make the payment to the creditor. This creditor, the creditor for the drawer, is also known as endorsee. So on the due date, the drawee is going to make the payment to the endorsee, and this is known as endorsement of the bill, because the bill of exchange, it also serves the purpose of just like cash, right? So we had to receive 1,000 from drawee and we had to pay 1,000 to the endorsee, so we can simply pass on the bill to the endorsee. The next option is sending the bill for collection to the bank for collection. So what does this mean? Now the bank, it provides various services to the like business enterprises. One of the services that is performed by the banks is sending, collecting the bills that have been drawn by the business. So there might be a possibility that the business has a lot of bills of exchange that have been drawn on different people. So what the bank is going to do is, it is going to keep a track record of all the bills of exchange, keep a track of all the due dates, and as and when the due dates of the bills come, the bank is going to collect the bill of exchange, the money from the bill of exchange, and deposit it into the bank account. So this is one of the service performed by the bank. It is different from discounting the bill with the bank, but because in case of discounting the bill with the bank, you receive the money immediately, but in case you have sent the bill to the bank for collection, you will receive it only on the date of maturity, but you don't have to get into the hassle of collecting the amount. The bank will do the needful. So these are the four kinds of uses of bills of exchange. Today we'll be talking about the first one, that is retention of the bill. That what are the accounting entries at the time of retention of the bill, when the bill is retained by the drawer. Please, again, I would like to add that I have talked about the parties to the bill of exchange, that is the drawer, the drawee, and the payee in my previous video. Please click on the I button and have an idea about all this before proceeding further. Moving on, let's talk about the accounting treatment in case of retention of the bill. So in case of retention of the bill, what is the accounting treatment? You need to prepare journal entries in the books of the drawer as well as in the books of the drawee. That is what will be asked in the question. So in the example, in the story that I took, I had taken the example of A being the drawer and B being the drawee. So I have continued with that example, so that since that example is in your head, so it will be more relatable to you. Okay, so we have to pass journal entries in the books of drawer as well as the drawee. Now what will be the journal entries? First of all, according to the story that I knitted, that I told you, the first thing that happened was, I'll just reiterate the same here. A sold goods to B. A had sold goods to B worth rupees, let's say 1000. Okay. So what will be the first entry? In the books of A, we have to pass the entry for sales. And in the books of B, we have to pass the entry for purchases. Right. So in the books of A, the entry would be the drawee or B's account will be debited since he is the debtor. This B is also the debtor for A, and sales account will be credited with the amount of the sales that have been made. And in the books of drawee, the entry will be for purchases. Purchase account is debited and the drawer or A's account is credited since these are credit purchases. So basically A is also the creditor for B. Right, again this entry will be passed with the amount of purchases that have been made. So correspondingly, I have made entries in both the books. In the books of the drawer, I have passed the entry for sale, and in the books of drawee, I have passed the entry for purchase. So after the purchase was made, then what happened? A had drafted a document and had sent it to B. So for drawing of the bill, when A draws a bill, there is no entry. Okay, so there is no entry for drawing of the bill because the bill becomes a legal document only when it is accepted by the drawee. So after A had drawn the bill, B had given the acceptance, and after he gave the acceptance, then he returned the bill back to A. So for acceptance of the bill, we need to pass an entry. So when the bill is accepted, then it becomes the bill of exchange. This bill of exchange for A is bills receivable, that bill against which the money is going to be received, and for B it is bills payable, that is that bill against which money has to be paid. See, bills receivable, money has to be received, so this is a asset, hence it has a debit balance. And bills payable, money has to be paid, so it is a liability, hence it has a credit balance. So for acceptance of the bill, the journal entry in the books of drawer, that is A, would be bills receivable being an asset is debited and the drawee or B's account is credited. Now why is it credited here? Because in the entry for sales, we had debited B's account because he was our debtor. Now our debtor is being converted into bills receivable. We cannot have the debtor also and the bills receivable at the same time because it is one transaction only, right? We have to receive, let's say, 1000 rupees from B. That is the entry, that is the transaction. So we cannot receive 1000 rupees from B and 1000 receives rupees against the bills receivable. So when the bills receivable is created, we need to write off B's account. Now B is no longer our debtor. Our debtor is converted into a new asset, that is bills receivable. Similarly, in the books of drawee, we may pass the entry for acceptance, that is our creditor A now is debited, he is written off, and it is converted into bills payable, which is a liability, and hence it is credited. So this is the entry for acceptance of the bill. Then what happens? The treatment of the bill. Now treatment of the bill may be in terms of either you have retained the bill, or you have endorsed the bill, or you have discounted the bill, or you have sent the bill to the bank for collection. There can be four possibilities as per the uses that I just explained to you, right? Now we are talking about retention of the bill. So we have not endorsed, we have not discounted, we have not sent to bank for collection. We have retained. When we have retained, we are actually not treating the bill. We are not putting it to any other use. We are retaining the bill till the date of maturity. So since there is no treatment at the time of retention, there will be no entry. You don't need to write it there. Only for explanation, I have written it here, right? So wherever I'm writing no entry, this and this is only for the purpose of explanation. In the question, we are not going to write there no entry, no entry, but this is only for the purpose of explaining it to you, right? Then what happens is the bill is met on maturity. There might be a situation when the bill is not met on maturity. We'll be discussing that later when I do a video on dishonor of the bill. Right now we'll be assuming that we received the payment on the date of maturity. Okay, so on the date of maturity, what is happening? The drawer is actually receiving the cash from the drawee. So the drawer is receiving cash. So therefore, cash account should be debited in the books of drawer. And why? How is the drawer receiving the cash? He is receiving from drawee. No doubts about that. Many children make the mistake of writing here to B, because B is the person who's making the payment. But please make sure you understand that first B's account was debited since he was a debtor, but then you credited his account. So basically his account does not exist in your books. In your books exists what? The bills receivable. So money is received against bills receivable, although B is the person who is paying it, but it is received against this particular asset. So asset which was created now is credited, indicating that asset is no longer with us and we have received the payment. So cash bank debited to bills receivable. In case of B, what will be the entry? He is making the payment. So obviously cash or bank will be credited because cash is going out, and bills payable will be debited. Bills payable was a liability which we had created, although he is making the payment to A, but again A's account does not exist because we had first credited it and then we had debited it. So A's account does not exist in our books. In our books exists the liability bills payable, which is now being paid. So therefore bills payable is debited to cash or bank. This is the entry that we'll pass at the time of maturity. Another thing which requires attention is how to calculate the date of maturity. I'll just explain it here and then I'll reiterate it in the example. So date of maturity is calculated how? You simply add the number of months for which the bill is made. So number of months for which the bill is made plus 3 days of grace. Okay. You have to add 3 days of grace. So for example, if I say that the bill was drawn on 1st of January for 3 months. So what I have to do in 1st January, I have to add 3 months. So from 1st Jan to 1st Feb, 1st Feb to 1st March, 1st March to 1st April. Okay, 3 months. So that means we come to 1st of April plus 3 days of grace. So 4th of April is our date of maturity. I'll explain this again in the example that I've taken. So let's understand this all with the help of an example. On 1st of January 2019, A sold goods to B. A has sold goods to B. So you first of all identify who is the drawer and who is the drawee. A has sold goods. So obviously A would make the bill of exchange. So he is the drawer. And B, on whom the goods to whom the goods have been sold, who gives his acceptance is the drawee. Okay, so for 5,000 plus IGST 18%. Now A received 500. I'm sorry, this is not 500, this is 900. A received 900 by check from B and drew upon him a bill for the balance amount payable 3 months after date. So what happened was that the goods were sold worth rupees 5,000 plus IGST at the rate of 18%. So IGST at the rate of 18% is 900. So total amount was 5,900. Out of this 5,900, 900 is paid through check and the remaining 5,000 on this a bill is drawn. This is what he is saying, and the bill is drawn for 3 months. He retained. So we know how he used the bill. He retained the bill till due date. On the due date, the bill was paid. You need to show the journal entries in the books of A and B and the necessary accounts in the books of both the parties. Now let's look at the journal entries. So journal entries in the books of A, that's the drawer, and in the books of B, that is the drawing. So in the books of drawer and the drawee, the first entry, what happened? What was the first thing? A had sold goods to B, right? So first entry would be for the sale and purchase, right? So in the books of drawer, I have passed the entry for sale of goods. B is debited since he is the debtor to sales to output IGST, that's 900, total 5900 in B's account. Now similarly in the books of drawee, I need to pass the entry for purchases. Okay, so purchases account DR, input IGST account DR to A, that is the creditor account. So this is the entry that we pass for the sale or purchase. Now what happened next? Out of total 5900, 900 was received by check. Okay, it was received by A from B in the form of check. So the next entry will be for the payment that is received, the part payment received. The part payment received. So since it's a check, so bank account is debited with 900. Who is paying it? B is paying it. B is a debtor for total 5900 and he has now paid 900, right? Similarly in the books of B also we will pass the entry for the part payment which is made, payment made through check. So since it is through check, so to bank, and payment is made to A, so 900. So to A total 5900 had to be given. Out of that 900 is already paid. Now then he says that on the balance amount, what is the balance amount? 5000. On the balance amount a bill is made and it is accepted by B. So for the bill, again when the bill is made, it is bills receivable for A and bills payable for B. So in the books of A, the entry is bills receivable account DR to the drawee's account. Now the entry has been made for rupees 5000. Why? Because B was debited with 5900, already credited with 900. Now it is credited with 5000 and the bill B's account does not exist in our books. So B is now converted into, the debtor is converted into bills receivable worth rupees 5000. Similarly in the books of the drawee, we'll pass the entry for bills payable. A is debited with 5000, the balance amount. Now A's account does not exist in the books and a new account is created, bills payable, the bill against which a payment is to be made for rupees 5000, right? So now what happens is he says that on the due date the payment is made. Now the bill was for 3 months. Again the same example that I had taken has come up here. 1st Jan was the date of bill, right? The bill was made for 3 months. So if I add 3 months plus 3 days of grace, what will be the amount? 1st Jan plus 3 months amounts to 1st of April. If I add 3 months to 1st Jan and plus 3 days of grace gives me 4th of April. So my due date is 4th of April. On 4th of April the amount is received. So that means on April 4 I have as in the drawer has received the amount. So cash or bank is debited because the amount is received by B, but against what? Against the bills receivable account. I would like to repeat here, many children make the mistake of writing to B here. You don't have to write to B because B's account is already closed. The new account, that is bills receivable account, will be credited because you're writing it off and you've received the payment. Now bills receivable account is also closed. Similarly in the books of drawee also you will pass the entry, the liability, he is paying the liability, bills payable is debited to cash. Again you will not debit A's account here, you will debit bills payable account here because he is making the payment against the bill. A's account is already closed, so to cash or bank. So these are the journal entries that you will pass in case of retention of the bill in the question example that we had taken in the books of drawer as well as the drawing. The first entry, because it was mentioned sale is made, so first entry was for sale. Then some payment was received, then we pass the entry for that correspondingly in both books. Then the bill was accepted, so we pass the entry for acceptance, and finally it was met on maturity, so we passed the entry for receiving the amount of the bill. Now in this question you were also asked to prepare ledger accounts. So in case of ledger accounts I have prepared only the drawer and drawee account in the books of each. So in the books of drawer A, see, you have to remember that in the books of A's account will not be there. We don't maintain our own account in our books, right? So in the books of A will maintain the account of B, and in the books of B is going to maintain the account of A. So how will the account be maintained? As you can see, I have already done the postings. Okay, based on the transactions, the journal entries that I had done, I have simply made the postings here. The first entry was for sales, right? The entry was B's account dr to sales. I'll just write it down. B debit to sales to output IGST, right? So in the books of B, it is debited in the name of sales and IGST. So to sales to output IGST I've written here on the debit side. Okay. The next entry was when the part payment was received. So in the books of A, the entry was bank account was debited and the payment was made by B worth rupees 900. Now again we are preparing B's account. So B is credited in the name of bank. So by bank 900. The next transaction was for acceptance. So bills receivable account dr to B. Again B is credited in the name of bills receivable. So by bills receivable 5000. The total on both sides is same. It is equal, which indicates the account is closed. Similarly, the same thing we have done in case of A's account maintained in the books of B. Let me tell you that as well. The first entry was for purchases. So purchase account dr input IGST account dr to A. So A is credited in the name of purchases and input IGST. So that's what I have done. On the credit side, I have mentioned by purchases by input IGST. Then the second entry was for the part payment received. The part payment made to A. So entry was A account dr to bank. So A is debited in the name of bank. So to bank, sorry, I have written the wrong amounts here. To bank 900, that I have written. Then the last entry was for bills payable. So A account dr to bills payable. Now again A is debited in the name of bills payable. So therefore I have written two bills payable and the amount is 5000. Again the total on both sides is equal because the accounts are closed. So in this video, we have talked about the meaning of bills of exchange. We also talked about the uses of bills of exchange. There are 4 uses. And specifically, we talked about the accounting treatment of bills of exchange in case of retention of the bill along with the help of an example. I hope that everything is clear to you. If you have any questions, you can contact me on my email ID or you can leave a comment in the comment section below. I will try to answer it as soon as possible. Also, please like, share, and subscribe to my channel. It will really motivate me to post more and more content for you all. So, this is Inside Accountancy by Shakun signing off. Thank you so much.